Hi traders, and we're going to go for a little bit of a different tactic this week for the trade of the week. If you can't tell from my voice, I've been unwell towards the end of the week, so that's why I've not done an intro video. But I just want to go through. We had a couple of trades earlier on in the week which were pretty textbook. They just covered the whole thing around liquidity grabs and higher time frame context, which I feel we've covered quite a lot lately. Towards the end of the week, we had quite a lot of news out, so there wasn't a lot of trading going on anyway. We had Bank of England announcements, ECB announcements, NFP numbers out. But I just want to, so for this week's trade of the week, we're not going to look at an exact trade, but this is something that if you follow my analysis, you'll be able to see something in the analysis which can then lead on into the price action. And I think it's a really important lesson to learn as well. So this is my report on Wednesday. Now, on the FTSE, we said that the FTSE had broken out, but we said that below resistance, price is still bullish, but also a little choppy. However, if you notice, on the DAX on the same day, we said that DAX had broken above resistance, so very similar to the FTSE. However, we can see here, we said that if we can gain acceptance above the 725 to 745 zone, then the bulls are back in the driving seat. So below there, we were still bearish, but above there, we were bullish. So with the FTSE, we were bullish, but with the DAX, we still needed to gain acceptance above that resistance zone for the bulls to gain control. So the markets weren't in sync, they weren't aligned. The FTSE was stronger than the DAX, and the DAX still needed to break above that 725 to 745 zone to get in sync with the FTSE and really turn back into the bullish tone. Now, I just want to show you what happened for the rest of the week, and you can see how the difference in terms of the overall picture of the markets can then lead into the price action. Okay, so as you can see, this is the DAX. Now, this was Wednesday's price action up here, and this was the open candle here, and then we pushed up into this 725 to 745 resistance, and look how price just rejected it, and ever since then, look how strong this sell-off has been. And especially on Friday, we got a really strong sell-off in Friday's session, starting off at the cash open and really pushing down. Consolidated a little bit in the afternoon, but noticed how strong this sell-off is because the overall market was still showing weakness below that 725 to 745 zone. Now, what I want you to do here is take a look at this action, and now we're going to compare it to the FTSE, which was, as the analysis suggested, was actually bullish, whereas this was more bearish. So we can have a look and see how the markets behave differently considering that fact. So notice here, this is the same time period as the DAX, but notice how the sell-off, although we've ended up lower than where we did on Wednesday, it's still very much, it didn't sell off as strongly. So what I'm trying to explain and get across here is when a market is more bullish than bearish, the sell-offs will not be as strong. So even if other markets are selling off, if you know that that particular market still has a bullish tone, you want to be careful. You still want to be careful of shorts. And the reason for that is because the bullish tone will naturally suggest that there are still more buyers than sellers in the market. So when there is a bearish tone in another market and you start seeing some selling, that is the market that you want to focus on for your sell trades. You still need to exercise caution in other markets which maybe are showing more of a bullish tone. So it's really important to understand what a market is doing, where it is in relation to where your bias should be, so that you can position yourself on the right side of the market and adapt your strategies and trade the correct markets at the right times to keep yourself safe. So I hope you found this useful. Like I said, a little bit of a different tack this week, just because the couple of trades that we got earlier in the week were very similar to the types of trades that we've been covering a lot in these sessions. But I just think this is a really important note an important fact to note, that being aware of where your bias should be and how that should affect your trading decisions and how that can actually affect the price action in the market is really, really important. So I hope you found this useful, and we'll get back to reviewing a proper trade of the week next week. Have a good weekend.